Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is Morgan Stanley Managing Director, Private Wealth Advisor, Kathy Entwistle. Also with us is John Lonski this morning. Good to see you. Thank you so much for joining the conversation.
Happy to be here.
I want to get your take on some breaking news right now. Warner Brothers Discovery reporting quarterly earnings moments ago. It's actually a loss, not earnings. The company reported that it lost 10 cents a share. For the quarter. The estimate was a loss of 3 cents a share. They did beat on revenue. The company expecting to incur additional transaction and separation-related costs in the first half of the year. Ahead of a reported White House meeting today with the CEO of Netflix, Ted Sarandos, is going to the White House to discuss this takeover deal as Paramount still is pushing forward to want in on this transaction. Your reaction, John?
Well, I guess, a little bit disappointing on the report that we're getting from Warner Brothers. And it's still an open question as to who's going to go ahead and win that takeover fight. Will it be Paramount or Netflix? We'll have to wait and see. Fascinating that the White House is getting involved in this matter.
Well, I mean, I think it's really interesting in the age of AI and AI making movies, how this valuation is so rich.
It's interesting because when you think about it, here we have two companies that have been long-standing and around, and now they're using like the new technology, the AI, and the different level, and we're seeing that the ones that have the biggest opportunities are the ones that are going to survive. So we want to really look and see who's going to make that transition and be able to deliver on the AI side front too.
Well, it's good to see deal flow happening again. That's for sure, because capital markets are once again showing that we've got a host of IPOs coming later this year. We're waiting, obviously, on SpaceX. That's going to be an enormous deal. Maybe that takes lots of boats up with it. But let's take a look at futures this morning, because this morning we're looking at an unchanged to flat situation. But that's a victory. We started the show. Things were lower across the board. And we're waiting on some news in terms of where this rotation goes next. Yesterday, all three major indices ended higher. The Dow was up 300. The NASDAQ was also up in the triple digits. The NASDAQ was up 288. That was 1.25% yesterday. Second straight session of gains of better than 1%. And, of course, after the close, we had Nvidia reporting strong fourth-quarter numbers. They posted a record revenue of $68.1 billion. CEO Jensen Huang talked about data center sales surging. They were up 75% to $62.3 billion. Total revenue up 73%. Demand for AI chips drove record growth, and the chip maker issued strong guidance forecasting first-quarter revenue at around $78 billion, above estimates. Jensen Huang also said computing demand is growing exponentially. And the agentic AI inflection point has arrived, John. Your thoughts on Nvidia and the AI space?
What a story, huh?
Yeah,
One
really.
quarter after another, simply incredible, unbelievable. AI is growing just so rapidly. But, when you look at, though, the amount of money being spent in capital spending related to AI, you have to stop and ask yourself, will all this money ultimately generate an adequate return?
Yeah.
I mean, they've just run into a new potential regulatory problem where AI data centers are not going to be able to take power from the grid, that they're going to have their own power plants.
Yeah, that's
an extra
why these
cost.
tech companies are going to the White House to talk to President Trump about that.
Yeah, and I'm looking at the overall planned capital spending for the four biggest hyperscalers. That's coming to $700 billion this year. $700 billion, my goodness. That's about 16% of last year's total business capital spending.
Yeah, I mean,
we've never seen this before.
You forget, how significant this is with the numbers we're talking about. Last year, at one point, Nvidia hit $5 trillion in market value. But, Kathy, this year, we're seeing a little bit of a rotation. Money moving out of some of the hyperscalers and these big tech companies and into value, into hard assets. Gold up double digits year to date. How do you position a portfolio in this movement? Do you think this rotation continues?
Yes and no. I think there's a slight bit on the rotation side, but we want to stick with the tried and true long-term thinking in terms of where is not just the value, but the opportunity for growth and the ability to position these companies that are AI-driven and to see those results when it comes to earnings and opportunities. And we want to stay invested in those companies as well. But you have to be selective.
So does that mean to buy a little gold, buy some hard assets, buy some value while also keeping your foot in the AI door?
Absolutely. You want to have a diverse portfolio, and it's a good way to just hedge overall. But in the long term, you want to have a little bit of the gold, a little bit of the value, and also a lot of the growth, because that's what has historically done well.
All right, we will leave it there. Keep watching the market. Great to see you, Kathy.
Great to see you,
Thanks
too.
so
Thank
much.
you.
Kathy Entwistle here, Morgan Stanley. John, you're with us all morning. We appreciate that. Quick break. We'll be right back.